This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performances do not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk. There's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading.
Good afternoon, traders. I'm Scott Norris here with your Forex report. Today is Wednesday, January 31st, 2007. Today may have been one of the busiest, most volatile days Forex traders have ever seen. With a full economic calendar and speeches from both Treasury Secretary Paulson and President Bush, the greenback was bouncing all over the place. The first piece of data to cross the wires was the January private sector jobs report from ADP. A reading of 152,000 beat economists' expectations and was a huge improvement from the 40,000 job loss posted in December. However, traders didn't flinch as the first reading of fourth quarter GDP was due just 15 minutes later. This highly anticipated release had traders all over the world on the edge of their seats and came in at a red-hot 3.5%. This was much better than expected and marked a sharp rebound from third quarter growth of only 2%. However, the greenback rallied only a short while before losing its foothold. As we headed into the Chicago PMI release, traders were selling dollars. A drop in the index below 50 then opened the door to additional selling as Hank Paulson spoke sternly against the weakness in Asian currencies in an address to the Senate Banking Committee. Such comments have historically been viewed as a green light to sell the dollar, and traders rushed in to do so. As the European session came to a close and traders geared up for the 2:15 Fed release, the dollar was resting near its lowest levels of the day. Dollar bulls were now counting on a very optimistic statement from the FOMC following an almost guaranteed hold on rates. The FOMC did in fact leave rates on hold at 5.25 and left the dollar bulls out to dry with the accompanying statement. While members of the committee did note that inflation risks remain, they may not have been optimistic enough on the state of the economy. Traders had some big expectation heading into today's release and likely felt shortchanged by the Fed's assessment that the economy should, quote, expand at a moderate pace. The dollar gained for about 2 minutes, then sold off, and then rallied again. We believe this battle could extend into the normally quiet hours ahead of Asian trading. Till tomorrow, have a wonderful night trading. Take care.